It's another month at Life Insurance Strategies Group where we're seeing an increased interest in private placement life insurance and private placement annuities. Now, inevitably with their clients, we're having to discuss the difference between the primary two types of carriers that work with folks in the U.S., domestic carriers and offshore carriers. Now, domestic life insurance companies are those that are domiciled in one or more states and regulated by the state insurance regulators. Now, unlike retail life insurance companies, which may be registered in all 50 states, domestic private placement companies, for the most part, are admitted in states with low premium tax rates, and this translates into slightly lower policy expenses. Now, these states are most often South Dakota, Delaware, Alaska, and Wyoming. Now, policyholders who buy from domestic private placement life insurance companies can use U.S. domiciled investments, U.S. custodians, and U.S. investment managers. In addition to domestic carriers, many private placement companies are set up outside the U.S. but make an Internal Revenue Code 953D election to be taxed as a U.S. taxpayer. Popular offshore jurisdictions for domicile of these private placement life insurance companies are Barbados, Bermuda, Cayman, and Puerto Rico, and there are some others. Now, yes, despite being a U.S. territory, insurers can elect to be offshore when set up in Puerto Rico. So why would an insurer set up offshore? Well, for private placement, an offshore carrier that has made a 953D election is not subject to state premium taxes and can allow their policies to be owned by trusts or LLCs in most states, as well as in countries outside the U.S. Perhaps even more attractive is that policyholders with offshore carriers can choose from both U.S. and non-U.S. investments, custodians, and investment managers. This can be advantageous since many hedge funds and alternatives are registered in Cayman and Bermuda and not in the U.S. So that gives policyholders access to these alternatives. Now, while this may be an added flexibility, there may be some detractors to working with offshore carriers. Now, usually the capital requirements for these carriers are far less than domestic carriers. And also, offshore carriers are not permitted to actively sell or promote their companies or products in the United States. Plus, you don't really have to be licensed to sell for those companies. Now, technically, most of those offshore companies will do diligence on a producer or broker to make sure that they have U.S. licenses and have a history of selling, but technically, no one has to have a license to sell for these offshore carriers. Now, if a prospective client of an offshore company is meeting with offshore carrier employees and receiving branded sales materials about the company or its products in the U.S., this should be a red flag for the client. This type of illegal activity can mean civil and criminal problems for everyone involved. So if you're considering a private placement insurance or annuity transaction and want someone on your side of the table, reach out to us at lifeinsurancestrategiesgroup.com. Remember, we don't sell products. We help our affluent individual and institutional clients make decisions involving complex life insurance strategies.